Hey, what's up guys? It's Emmanuel here and this is the second episode of the series. I recently bought a house at 25, which still feels unreal. And this week, drumroll, the bank just got their money, paid my down payment. I'm going to be eating ramen noodles for the rest of the year.
Flashback.
Why are they allowing you to use Face ID to scan this amount of money? This amount exceeds the daily maximum limit. Please call us.
I had to go to the bank.
Oh shit.
Welcome to Today. Are you speaking to Amina? How can I help you?
I'm trying to pay the 10%
And how much are you going to transfer?
for 300,000 crowns.
And you got the money from Avanza, right?
Exactly.
Okay, just give me a moment, please.
Give me the chai. Give me the chai tea.
Give me the chai, woman.
Give me the chai, woman. Oh, I'm ready. And now it says confirmed.
That's good.
That's amazing. Okay.
Yeah.
Now I feel very poor.
Yeah. No problem. Do you need anything else?
No, that's it. Thank you for the help. Have a great day.
And congratulations for your daughters.
Thank you very much. Bye-bye.
Yeah! You are!
You
I
are!
can see you right now.
I see you have nothing! It's done now. Right? High five. Bam!
Ay.
How do you feel? Give us your post-game interview.
I still feel like I have money, so.
Join me here where we'll be searching for a new girlfriend.
End of flashback.
Alright, so today I want to get into the details of how much the house cost. I'll talk about how I managed to save up the money. I'm going to go into depth about how much I've made each year, also touching on the financial aspect, how loans for housing in Sweden works. I'll share the practical tips that actually made the difference for me in being able to get here. Because this has been a goal that I have had for the longest while. But until I actually made changes in my system, actually buying a house was impossible. And then I'll also talk about what's coming up next, now that the moving date is set, which is the 25th of April. So let's get into it. So saving up for the down payment, there's two important concepts. The first is setting up a plan. And now before we get started, I want to give a quick breakdown of my experience. 4 years ago, I set the goal of buying a house, but for the first two, I made zero progress. Looking back, it's quite clear why I didn't make any progress, and the reason is because my goal wasn't clear in any way at all. I didn't know what kind of house I wanted to buy, I didn't know how much it was going to cost, I didn't know what the right type of house was, or if it was an apartment, I didn't know how long it would take me to get there. And this lack of clarity made it very difficult for me to stay motivated, actually made it impossible. And when you don't know exactly what you're working towards, every dollar that you're saving feels like a drop in the ocean. I was thinking like, okay, of course I'm saving, but how do I didn't really feel like I was getting closer. And without a specific goal, you're essentially floating on everything else. Family life, social life, distractions, the constant urge to spend money on the new iPhone. Everything will keep pulling you away from what exactly you should be focused on. And it wasn't until I nailed down exactly what kind of house or property I wanted, then I was able to figure out, okay, this is how much it costs based off, looking at the market, looking at Hemnet and Booli to be specific. And then once I was able to do that, I was able to then create a realistic timeline, and then things start to click. And then once you have a concrete number to work with, in my case, I forecasted that if I save 25,000 crowns a month for the next 2 years, that I will be able to get the place I wanted around 4 million crowns. Luckily, I didn't have to save that long because of the downturn in the real estate market. So I was able to get something that I felt was undervalued. So to summarize, if you're clear about the type of house, the target you have, and you have a specific number from day one, you'd be able to save smarter and not harder. And that's the mistake that I made. The second thing is a concept called savings rate. And this is what I think most people get wrong when it comes to saving money. Everybody talks about increasing the income, but the real number should be focused on is actually the savings rate. And essentially what your savings rate is how much you can put aside after paying all your necessary expenses like bills and food. And the higher your savings rate is, the faster you're able to reach your financial goals. So because income matters, but only to the extent that it boosts your saving rate. So you could increase your income by 100%, but if you also inflate your lifestyle, then you're no better off than where you were at before. Why do I know this? Because of course I've made the same mistake. And I'll tell you a true story. When I was 21 and I got my first real job, I was making, I was making 28,000 crowns a month, which is around 22,000 after taxes. I wasn't paying rent at the time, so I was able to save around 15,000 crowns every month. Fast forward to when I was 23, I was making 48,000 SEK a month before taxes, which sounds like a big win, right? I mean, here's the thing though. I had actually inflated my lifestyle. I had bought a car. I had upgraded all my electronics, new gaming PC, PS4, like pretty much everything that you wanted to spend money on when you were a child. I bought all that stuff. And then, of course, I had also started paying rent because at that point I'm an adult and should contribute to the finances of the house, right? And in the end, I was only able to save 18,000 crowns every month on a good month. And of course, inflation also affects all of this. But essentially, even though my income had increased, my savings rate had actually increased by 20%. And what does this tell you? In my case, I think income alone won't solve any problem you have. If your expenses grow along with your income, you're essentially moving sideways, or as my dad, who started watching my videos, would say, you're taking one step forward and two steps backwards. And this is the most important lesson I think I've learned. You have to manage your lifestyle inflation. If you want to achieve your financial goals, if you're not saving more of what you make, it doesn't really matter how much you earn. You could end the video right here, and I think that the point would have been made. But actually, I have more tips for you. Now that the concepts are clear, the practical part of getting this done is, number one, automated savings in a separate account that you don't see. For me, the key was making savings a habit. So automatically putting money in a different account, very important. If you don't see the money, you won't think of spending it. I recommend that you use something like a high yield savings account, specifically for your home fund, and this can prevent you from dipping into the money for other purchases. And you can also earn interest on the money as it's growing. Number two, cutting all unnecessary expenses. For me, I had to really evaluate where my money was going. I found that I was spending money on Foodora and Uber Eats 3 times a week, and I had to stop. I didn't really, I started asking myself, do I really need that monthly subscription for Amazon Prime to use and spend more money? It wasn't really adding a lot of value to my life. I started trying to ground the value of my money by tying it to my hourly salary. So is this subscription worth 1 hour of my life? And very quickly, a lot of things started seeming unnecessary, and I recommend you do the same. 2, if you have any employer, home buyer, government programs for first-time buyers. This is usually very common in the US, but sadly in Sweden we get nothing like that. You have to work hard for your money, and if you don't have it, screw you, I guess. But still, if you have any programs like that, make sure you use it. Search. In Sweden you have to pay 15%, but I know in the USA it's lower. I think sometimes you can even get 5% down loans, probably because the values are overinflated and otherwise you won't be able to buy anything. So let's not open that kind of worms here. This is not supposed to be a political video. The third is actually saving a bit longer and buying something a bit bigger, like a multi-unit property. And even though this kind of perpetuates the problem that we're already having, I do think that it's great if you have the option of renting out to friends or family. And this allows you to offset the mortgage cost by renting out to people, but also being able to buy something a bit bigger as well. And of course, this helps you pay down the down payment while allowing you to also build equity up in the long run. I also recommend increasing your credit score with smart moves. So paying off any small debts you have, generally being smart with how you use your credit card. I recommend you watch the guy who does like financial audits.
You know, you cannot afford to go out to eat at all, right? To be very clear, not a single time.
If you're planning to buy soon, try to avoid making big purchases like a car, big furniture, taking out new credit cards within 100 days of applying for the mortgage, because the banks usually check that stuff. And if you make drastic changes in your financial situation, they might choose not to approve you for a loan, which is sad. So how amortization works in Sweden is that you have to amortize for any loan that's above 50% of the home's value. So if your mortgage is above 50% of the house price, you have to pay at least 1% of the loan back every year. And if the loan exceeds 70% of the home value, you have to pay back 2% every year. And some people stop paying this completely once they get to 50%, invest the extra money into like the stock market. You can't just skip amortization entirely unless your loan to value ratio is under 50%. So if you're putting down a big deposit or taking out a smaller loan, you might have the option to just pay the interest for a while. And that can feel like a huge advantage for people who want to keep their monthly repayments lower. Another thing is the fact that we can deduct. So 50% interest payments on mortgages are tax deductible. It effectively lowers the interest rate that we have. So let's say the national interest rate is 3%, you're actually paying 1.5. And this makes it attractive for people to carry larger mortgages, which I think is a problem. And it's something worth considering if you're deciding whether to buy or rent, because owning your home might end up costing you less in the long term, especially with tax benefits. Also, there's a lot more flexibility once you own in terms of like government programs that allow you to get discounts on work to improve the property. So like if you're doing stuff like adding solar energy or batteries or car chargers, you can get almost half of the costs, depending on how many owners you have on the house. You can basically write off half of the costs and get that for free. So it makes it really attractive to own compared to renting. I'll skip the rest of the mathematical stuff, but if you want to know more about this, I can make a video basically relaying everything that the bank has told me. One more thing that I think is very important to mention: in Sweden, it's not mandatory to have life or health insurance when you're taking a loan. Some countries have this because they want to make sure that even if you die, the bank gets the money back. But in Sweden, we don't have that requirement. Now I'm going to talk a bit about the house and how much it costs. It's a 4-bedroom. The Swedish market is quite expensive, a good value definitely, but if you try to compare it to a place like Nigeria, spending this kind of money, you could build a mansion, you know, and that kind of hurts, but I mean, what am I gonna say? What can I do? I can make a whole video just breaking down the number. I don't want to bore you guys down with those details if that's not what you came here for. So now that the down payment is paid and everything is set, the next step is moving in. The date is confirmed. There's a lot that needs to happen. And as the date has been getting closer, I found myself feeling more and more excited. I start like thinking, oh shit, I want to have this here. I want to have a smart home system and I want to have like solar panels and start researching on all these things I want to do. It's kind of overwhelming sometimes, just setting everything up and all the subscriptions and for electricity and insurance, of course, not Netflix. It feels great to finally have a space that is mine. I have to figure out the logistics of actually moving all the stuff, cleaning out the apartment, and then all the furniture that I need to buy. I'm not looking forward to. I'm probably gonna get bankrupt, but I probably already am bankrupt. But regardless, it's a lot of things that I'm looking forward to sharing. How I basically plan to customize this house into being specifically mine, and all the cool nerdy stuff I'm going to do. So if any of that sounds interesting to you, I recommend you subscribe. If you're thinking about buying a house or making any big financial moves, I hope that this story or this journey helps, at least gives you some ideas on how to approach it. Thanks for watching. Just let me know what you want to see. Bye.